Hi, welcome to today's video and thanks for joining me. Today we're going to be looking at 4 reasons why I think that interest rates are actually going to increase this fall 2023. Sorry for the bad news, but these are 4 compelling reasons, and I hope you see my point of view by the end of this video. Now I'm going to do something completely different in this video. I've had some comments saying, hey, just get to the point, we just want to know what you want to say. Let us get out of here. And then other people really like the depth that I give. I'm one of those people that like the depth in the videos, but I'd like to know what you think of this video. The fact that I just get into the 4 reasons and have you on with your day, or did you really want to see more depth in my videos? So let's get those comments back and forth. I'm interested to see what you have to say. Okay, well, the Bank of Canada governor today announced that they're not changing the interest rate. They're leaving it at 5%. This is the overnight lending rate. And this was kind of expected, but these 4 reasons might compel you to think about why interest rates are going up. Oh, the first one, ready? Oil prices are on the rise. Well, OPEC countries, about 50% of the world's oil are being produced by OPEC countries. And so let's look at what Saudi Arabia and the other OPEC countries decided to do. Back in April, they decided to cut their oil production by 1.16 million barrels. And taking effect in July, now we're already in September, but taking effect in July was an additional 1 million barrels of oil being cut from their production as well. This is also not a temporary thing. They actually want to continue doing this for quite a while. The reason is because they're deeply concerned about the US debt and the amount of money they're printing, and considering the fact that all of the oil is being purchased in US dollars, they want to hedge their bet. So they're cutting production. So energy prices are on the rise. Look at this chart here. A little busy, but I'll break it down for you, okay? That orange line is the crude oil prices. You can see starting from around June 29, you'll see there, everything's been going up since then. And so you will have noticed that when you go to fill up your gas in your car, this is the price of the gas that you're paying. Now, Vancouver's getting beaten down with the price of gas. This is obscene. Something's got to change in Vancouver. But you see the green line is Toronto. The red line is the average cost in Canada. So you can see that the price in August spiked for oil prices, and you can expect that we're going to see that going to translate to the gasoline pump as well. Number 2, moving right along. In the United States, U.S. growth is not slowing down fast enough. They've had 8 consecutive months of growth. And one of the things that came out today, which is why the markets were falling, it's not just because of the decision, the rate decision of Canada, but it's because of the ISM index. What is the ISM index? This is an economic indicator, and let's read this together. The index is a survey of manufacturing, purchasing managers, and measures factors such as production, new orders, employment, and supplier deliveries. Any reading above 50 indicates that manufacturing is strong and expanding, and anything below 50 means basically the economy is contracting. So this is what came out today. Business activity index is at 57.3, new orders index at 57.5, and employment index at 54.7. So what does that mean? The US economy is not slowing down fast enough. So what is the likelihood that the United States, along with increased energy prices, is going to raise interest rates as well in the fall? Probably a strong indication. And the 4th one is going to show you exactly why I'm cementing this idea. Number 3, rising inflation. Canada's inflation rate is on the rise again. Look at this chart here. We saw inflation dropping month over month from the beginning of January. We saw it coming down, and all of a sudden in July that has peaked. And now with energy prices on the rise, you remember that inflation, one of the core pieces, or the 2 core pieces of inflation, was energy and the interest costs on your mortgage. Interest costs is not going down. They're not lowering rates, so that's going to stay present. And energy prices are on the rise. So what do you think? Am I just, maybe I'm getting ahead of myself here? I tend to think that actually we're going to see another increase in inflation for the month of August, and that's going to begin to cement the decision to give at least a 1/4 point hike. Now, Bank of Canada governor said this today in the interest rate announcement. He said, we're ready to raise interest rates further if needed. That is not someone telling us, hey, the economy is actually slowing down. We think maybe we got ahead of ourselves. We might start cutting rates before we thought we would. No, the whole language changed abruptly. You remember all the discussion leading up to this was everything's going well, inflation is coming down, we think we're headed in the right direction. Now they're saying something completely different. They're saying that the full effect of these rate increases isn't going to be felt until 2024. And today he's saying we might have to raise interest rates again. That doesn't sound like somebody saying, well, we're going to cool it for a while. I think he's trying to prepare us for another rate increase. And the last one, number 4, ready? You got to follow the money. Traders are already pricing in that interest rates are going to go up. Now this, you may not understand this right away. It doesn't matter, but it's the idea that you should be able to get this idea. This whole chart is based on BAC's prices. So I want you to think there's a security out there that it's called a banker's acceptance that is being traded. And it's a $1 million futures contract. And basically what's happening is that traders are pricing in or hedging their bet against inflation, right? So they want to make sure that they're not going to lose any purchasing power of the dollar. So they're betting or they're hedging about what inflation might do 3 months out. So a BAC's price contract is only 3-month duration. So you look here in September, December, and March. So September, we just went past, there was a 4% chance or probability that they were going to raise interest rates, a 1/4 point. But look at what the traders are pricing in for the December. This is a 48% chance. And then March, 34% chance of an increase. So traders, and that's why I say follow the money. Traders are not thinking at all that interest rates are coming down or are going to stay where they're at. They're actually pricing in that they believe interest rates are going up. And then if you look forward, as everyone has been expecting that interest rates will decline in 2024 at some point, it really only begins to decline. You see this 2025, they're saying 94% chance will be down 75 basis points. So it's not like a magic, boom, we're going to be down right away. This is going to be drawn out for a long time. So this was the 4th bullet for you to understand. Follow the money. Professional traders are not betting on interest rates going down. In fact, I think they're betting on interest rates going up slightly. So that is the 4th nail in the coffin for interest rates. I hope you love this. I tried to get through it as fast as I could. Remember, we take care of your wealth management so you can take care of what's most important to you. I thoroughly enjoyed this video. I thought it might be a little bit controversial, and I can't wait to see your comments below. Remember, if you like this video and you think other people should see it, hit that follow button and subscribe to my YouTube channel. I know you're going to love the content on that channel. And I look forward to seeing you in the next video. Thanks very much and take care.